Joining me right now is the president and founder of Potomac Wealth Advisors, Mark Avallone. Mark, good to see you. Thanks so much for joining us.
Good morning.
Does the China news impact the way you allocate money in the U.S.? Does it impact your expectations for the U.S.?
Well, the China news is a continuation of how they tweak and manipulate a managed economy. It's not a free market, and they're going to do whatever they can to keep a strong economy, not only to stay in power, but right now they're going to do it so they have more leverage and a stronger position against President Trump in these trade talks. So I think the China moves, however short-sighted or short-term in focus, they're actually a net positive for stocks. The stronger the Chinese economy, the stronger the trickle in the emerging market, and the stronger a valuable trade partner is for us. So for stock investors, it's always good to see China doing this. Long term, not sure how that all plays out.
Yeah, meanwhile, the Asian markets overnight were mixed, but the Shanghai Composite was up about 1%. So we are seeing the markets react to any talk of a trade deal between the U.S. and China or any impact on the economy there. Do you think we'll get a trade deal, and is that going to move markets once we do get a deal between the U.S. and China?
I think we will get a deal. We just don't know how deep or meaningful it is. I think at this point, President Trump and his Chinese counterparts both want a deal. The Chinese want their economy to pick up. President Trump wants a victory in a big way. So I think we're going to get a trade deal. But what happens with the run-up in stocks from January and February, first it was a Fed rally when Powell backed off a little bit. But this last leg of this 2019 burst in the stock market has been because of optimism on trade. So the risk now to trade is to the downside. If the market doesn't really like what comes out of these trade talks, I think the positive news is baked into the numbers, and the risk now is a little more to the downside.
Oh, the downside. All right, let me talk about retail for a moment. We got Target out with its fourth quarter numbers in about half an hour. The company expected to post an earnings per share of $1.52, revenue of $22.98 billion. Kohl's actually issued the fourth quarter numbers, also out today in about an hour. That retail giant expecting revenue of $6.58 billion, earnings of $2.18. Mark, characterize what we've seen from the retail sector so far, what you might be expecting today, or how the consumer is doing.
Well, first of all, the consumer is doing great, and we don't hear enough about that. But consumer household disposable income is up because of those strong wages. The debt service ratio that households deal with, it's the lowest in over 40 years. Consumer balance sheets are strong. There's a little bit of a stock market effect. People are actually saving more. Savings rates are up. All that is good for the retail sector. Now, what we're seeing on a company-by-company basis is who's executing. The two big ones are Amazon and Walmart. The question is, are we going to have a big three? Is Target going to join that list, or are they going to be the leader of the also-rans? And the determination today is going to be not just the revenue growth. We know top line is going to be strong. What are the gross margins? Are wage gains? Is the wage cost that they have to incur too high? Is their product mix hurting margins? We want to see what the profitability is to go along with increased revenue.
All right, Mark, real quick, do you want to put a new money to work in this market right here?
It's tough. I think what we're going to have this year, point to point, we're going to wind up with a mid-single-digit market. A lot of volatility along the way. I think people should realize that stocks are fairly valued here, and with single-digit earnings growth for the year, minimum gains from here on till the end of the year.
All right, we'll leave it there. Mark, great to see you this morning. Thanks so much.
Good to be here.
Mark Avallone on Investing Today.